In the world of Indian agriculture, there's a quiet but absolutely critical battle going on. It's the battle that helps put food on all of our tables. At the very center of it is the fertilizer industry. And today, we're going to put two of the biggest players right under the microscope.
So who are the companies actually fertilizing India's fields? Well, in this massive market, two giants really stand out: Chambal Fertilizers and Paradeep Phosphates. We're going to put them head-to-head, see what makes them tick, and figure out which strategy might just come out on top.
All right, first things first. Let's break down what these companies actually do. What is their core business? What are they really focused on?
Okay, so on one side, you've got Chambal Fertilizers. Think of them as a powerhouse in urea, which is one of the most common nitrogen fertilizers out there. But they don't stop there. They also sell things like DAP, that's diammonium phosphate, and NPKs, which are more complex fertilizers, plus seeds and other things for crops. Then you have Paradeep Phosphates. Now their name kind of gives it away. They're a leader in phosphatic fertilizers, but they also have a wide range of products, including DAP, NPKs, and urea. So as you can see, they sell similar stuff, but their main strengths are actually quite different.
But how do these different game plans actually affect the bottom line? Let's jump into the numbers from the second quarter of fiscal year 2026 and see what kind of story they're telling us.
Now, if you just glance at the surface, their sales growth looks almost identical. Chambal's sales shot up by a whopping 48%, and Paradeep's by 49%. You'd think it's a photo finish, right? Well, as we're about to see, that's pretty much where the similarities end.
For Chambal, that 48% growth works out to sales of 643 crore rupees. That's a really impressive number, and it was driven by really strong demand for its complex fertilizers, even though its main urea business took a small dip.
But then, you look at Paradeep. Their 49% growth, which came from a massive 30% jump in sheer volume, led to sales of 6,872 crore rupees. Yeah, you're seeing that right. That is more than 10 times Chambal's sales in the very same period.
It's just a staggering difference in scale, isn't it? But it brings up maybe the most important question in business. Does having a massive top line, those huge sales numbers, automatically mean you have a healthier, more profitable company?
And this is where the story gets really interesting. While both companies did grow their profits, Paradeep's net profit margin was only 5%, mostly because they were getting squeezed by high interest costs. But look at Chambal. Their margin was double that, sitting at around 10%. So what's the big takeaway here? It's simple. Chambal is just making more profit on every single rupee of sales.
Profitability is one thing for sure. But what about the road ahead? A truly healthy business also has to be resilient. So let's dig into the fundamental risks that are unique to each of these giants.
What's really striking here is just how different their vulnerabilities are. For Chambal, the risks are mostly domestic. They're political. You've got tight government policies on how urea is priced and potential changes to the subsidy system. Those things could hit their bottom line directly. For Paradeep, though, the danger is coming from abroad.
And this chart just says it all. A massive 75% of Paradeep's total costs are tied to raw materials they have to import, like rock phosphate and phosphoric acid. This makes the company incredibly vulnerable to global price swings, changing currency exchange rates, and any little hiccup in the international supply chain.
So what we really have here are two fundamentally different business models, right? Each one has its own clear strengths and its own clear weaknesses. And this brings us to that classic trade-off that every investor has to think about. Do you bet on stability or do you bet on high-volume growth?
So, in one corner, you've got Chambal, the stable veteran. It's a super profitable and efficient company, but its future is tangled up with the whims of domestic policy. And in the other corner, you have Paradeep, the growing challenger. It's got incredible scale and sales volume, but it struggles with lower profit margins and is totally exposed to the chaos of global markets.
So we're left with this one fundamental question. In the super volatile world of agriculture and global commodities, what's more valuable? The stability of a fortress or the sheer velocity of a rocket? Looking at these two giants, which business model do you think is truly built to last?